Hello and welcome to our roundtable, Cryptographic Asset Security Assurance, the do's and don'ts of digital asset security. On the evening of September 25th, the financial world witnessed one of the largest digital asset breaches in recent years. The Singapore headquartered digital asset exchange, Kucoin, detected large withdrawals of Bitcoins and tokens to an unknown wallet. I'd like to welcome a few of the foremost cryptographic innovators, visionaries, and authorities to form this expert panel. The format is going to be fairly simple. We will do a round of introductions, pose some questions. We received a lot of them, but we're going to try to keep it short and sweet so that everybody can view this. And without further ado, I'm going to go ahead and throw it over to my panelists so they can introduce themselves.
My name is Rebecca Aspler. I'm Director of Product Management at Unbound, mostly dealing with blockchain-based use cases, enterprise, digital assets, working with custodians, with exchanges. Have been doing so in Unbound for almost 3 years now, and doing product management for 20 years. I've counted quite a long time. So thank you so much for taking the time to join this session today.
Hi, everybody. First of all, I'm very glad to be on this panel with such a group of esteemed colleagues and experts. My name is Seth Malamud. I'm CEO of Liquid Group. We're a cryptocurrency exchange based here in Japan with operations in Singapore and Vietnam. And look, I help manage Liquid from a day-to-day basis, including managing our cryptographic asset management platform, servicing clients' deposits, withdrawals, and managing hundreds of millions of dollars of clients' assets. And I've sort of helped to build our digital asset management framework here at Liquid, and very much looking forward to the discussion tonight.
Hi, I'm Frank Weiner. I head up marketing for CPR, and I'm also the president and co-founder of the MPC Alliance. So today my participation on the call is mostly on behalf of the MPC Alliance. But again, thank you everyone for the chance to get together and looking forward to the conversation.
Hi, so I'm Richard Sanders. I'm the lead investigator with Cypherblade. We are most well known as a blockchain forensics firm. We also do solvency and security for cryptocurrency exchanges and provide an array of services for other cryptocurrency businesses.
Thanks for having me today. It's great to be here with everybody. So I'm Steve Ryan. I'm one of the co-founders of CipherTrace. We're a 5-year-old crypto analytics and tracing company based out of California. My background is banking and payments. I started my career in banking, later went on to run product management for First Data, a big, large credit card processor, and then later in my career, I ran strategy for Visa in the internet space. So I'm a banking and payments guy by DNA, and found myself in the crypto world in 2015. And I think it's the next generation payments. So anyways, glad to be here today.
Wonderful. And I'm Marcella. I'm your moderator. I'm with Unbound, and I'm the VP of Worldwide Marketing. So we got a ton of questions, like I said. The first one that I want to pose out to Seth, this is a collaborative session, so you guys engage. What we want to do is just maximize on your investment of time and what we get from this session, particularly because it's going to go out to a lot of audiences. So Seth, can you tell us a little bit more about the breach itself and what Kucoin could have done differently in this particular situation to shore up their defenses?
Okay, well, great question. I don't think Kucoin, first of all, I don't think anyone really knows exactly how the breach happened. Hopefully they'll come out with a postmortem. It's very healthy when entities do this. It's a tradition, as Steve would know, in banking, that a lot of times banks will, not necessarily publicly, but at least with other banks, they'll share like what happened to the breach. I don't think that Kucoin has done it at this stage. It's still sort of the wounds are a little bit raw still, but just looking at it from afar, it did seem to me that there might have been some linkage between the different, because it wasn't just one protocol or one type of token that was hacked, right? It was across several different protocols that were hacked. So what it leads me to believe is, one of a couple different scenarios, probably there was an insider involved, is kind of what I would deduct from it. And potentially, maybe there was something where the seed phrases for the different private keys were shared. So I think, right off the bat, I think that's an issue. If you have common ways to access the private keys, even if they're different protocols, that's going to be a problem. As far as how they've handled it in the aftermath, that's a whole nother topic, right? Because we don't know exactly all of the assets that they have. I know they've stated they have an insurance fund. I'm not going to comment on that, but certainly it's been disruptive. I think what they have done well, from what I can see, is that they're doing a lot of communications. I think on a daily basis, the CEO is doing an AMA with the community, and they've done a lot to reassure people that they're still operating, and they've opened up markets again. So they didn't go cold on people, and that's certainly to be commended. I think that, only later on will we really be able to understand where they really failed in terms of better securing the assets that they had under custody. I think,
Thank you.
Rich, I know Cypherblade, you guys have done a lot of analytics on or looking at this. I know I've been following you quite closely. Do you have some theories about how this happened and maybe where their security protocols fell down?
So I'll start with saying we haven't been looking at this in a not even a company matter. This has been a kind of passion project I'll look at on occasion on Twitter. I've put maybe 30, 45 minutes into the broader situation. I'll start with saying that I echo a lot of your sentiment, and I'm going to start with the topic of seed phrases and private keys. The only thing I really disagree with you on that, I'm not ruling out insider, but the bottom line is that there's so little that's known. I think the one thing that we can deduce is that they kept all their eggs in one basket, right? So they had their credentials in one place that was accessible. And this really resembles a lot of hacks, and I use that term very loosely, that I see with with retail, with individual folks, right? They have a password that's reused somewhere, or a SIM swap, and they have a seed phrase on Google Drive, and that's the keys to the castle, and they lose everything, right? That very well looks like, from the outside looking in, what happened with Kucoin, and that is a level of security that should not even be happening with small exchanges at this point. It's 2020. If this was 2011, I could see it and have a little bit more understanding. But at this point, it's like, it almost feels like being DJ Khaled. Like every few weeks, another one, and it's always the same lax security. And it's the one thing that really irks me. There's one other thing I have a slight disagreement with what you said. Even though 90% of what you said I agree with, was their communication. I think it's good, to your point, that they're communicating often. The exception that I have with it is that there's a very obvious level of dishonesty, and if not dishonesty, a lack of transparency in their communication, and that is what I find troubling.
So to that point, though, why is this still happening? I mean, Rebecca, you come across this a lot, and that's one of the reasons why folks are employing Unbound. But why is this still happening? Why aren't there these stringent kind of policies or standards that these companies need to take and consider in order to avoid this type of situation?
I would very much like to echo what just Richard said. I was very much surprised at the hack itself. We're in 2020. The fact that somewhere full seeds are being kept, or full private keys are being kept, regardless of if it should be with MPC or multi-sig or whatever it is. How come in 2020 they're keeping the full keys anywhere? This is so like 2016 or something. We're way beyond that evolution stage in securing infrastructure of cryptocurrencies or blockchain assets. Whatever anyone decides to do, whether it's multi-sig with HSM, whether these are SGXs with multi-sig, whether it's MPC, I don't understand. Full keys should never be kept at its full format in one place, one key. Never again. Don't go there. Just as simple as that.
Well, if I could add a little bit to that, it really has nothing to do with 2016 or 2010 or 2009. It's like, exchanges are the new banks. They store currency, right? And they store value for consumers. I think it was back in the 1800s that people figured out, why do people rob banks? It's because it's where the money is, right? So what's new? So cryptocurrency is a new store of value. It's fantastic. It's got all kinds of great creative things that are really going to change the world. But guys, if you're running an exchange, you really need, first thing you need to do is hire a chief security officer and figure out how to protect those assets between your hot wallets and your cold wallets. Figure out a program that diminishes your risk to your customer base, because things like KuCoin are just not good for the industry, and they can be avoided. It's not that hard, but you have to hire security people to do this, because many entrepreneurs don't think from a security perspective on how to protect assets. They think about how to grow a company and get adoption,
Right.
things like that, which is great. You need that for the business, but you need to protect those assets. So really, it's almost like, this has been going on for 150 years. This story's been written, the movie's been shown. It's like they just need to protect the assets, and there's people capable of helping them do that today. So it's core fundamentals of running one of these large exchanges.
I would like to echo that. We're meeting on a daily basis small startups that are considering buying Unbound, for that matter. And it is very often that during this conversation, I simply say, if you don't have a chief security officer and you can't afford one for, a full-time person, and Unbound might be too expensive for you, please go for one of the SaaS vendor out there, because you do need a secure infrastructure. And, once you grow, I would say bigger or manage more assets and you can afford to hire someone full-time, please rely on professionals to secure the infrastructure for you. Unsurprisingly, we meet many of these entrepreneurs that are thinking of security of, I learned it somewhere in the university. I took a few courses. I can do that on my own. And this is where we see problems going on. So we don't mind in that sense losing business to SaaS providers. We'll just wait for them to grow and come to us, back again. But very much echoing what just Steven said, you need a security professional, whether in-house or externally working with you, but work with a professional.
And I want to
Yeah.
echo off of, I'm sorry, go ahead, Frank.
No, I was just going to say, in some ways, hopefully this hack is a wake-up call, because there's a lot of smaller and medium-sized exchanges that have gotten comfortable. They felt like, well, nothing's happened to them so far, so what they've got must be okay. And that's just not good enough. We know that.
That's actually perfect for me to bounce off of, is the "it hasn't happened to me, it's not going to happen to me" mentality. That applies as much to security, as I know that's not inherently the focus of the conversation, which is the things I'm going to talk about now, but there's definitely a correlation between these companies that don't care about security and don't care about legal. Yeah, they often underspend on legal counsel, and compliance is another one too, right? So we all know what just happened with BitMEX, right? You can go on the Kucoin right now, right? And you could register and you can enter any name in any country that they support and any ID number, and you can be approved for 100x and 200 BTC withdrawal a day. I'll let you do the math on that.
Yeah.
The other thing, and I know I'm kind of clouding out a lot of the time too, when it comes to compliance, I look at companies like this and I see the kind of transactions that go through them. And these are the kinds of companies where if they're not spending money on security, they're not spending money on compliance, they're not talking to people like Steve about, Chainalysis KYT or Chainalysis KYT or CipherTrace or Elliptic or Crystal or any of these tools out there, the odds of them having them are very slim.
Right.
Yeah, the other part that this is for the world is to understand, if you look at, and again, I come out of banking and payments, my early part of my career was there. I look at cryptocurrency maybe through a different lens than a lot of people. I look at it as the third largest payment system in the world. If you just look at market cap, Visa's number one, MasterCard's number two, crypto is number three. It's larger than American Express. And by the way, when Bitcoin was up around 20,000 a coin, it was bigger than MasterCard. It was the second largest payment system in the world. So if you don't think that's going to create a target on your back, you sort of need to wake up, because this is a great new economy. We need to treat it appropriately. If we don't, we're going to have more and more regulation, some of which maybe we need, some of which maybe we don't.
Right.
But we're going to have more regulation. And so we're going to have to filter through that. But we need to self-manage this new ecosystem. People need to take ownership of protecting assets. And the challenge is it's diversified and it's global, and not everybody's going to do a good job. But hopefully the ones that do are going to get the bulk of the customers. So anyways, I'll leave it at that. Any other comments from the team here?
Look, there's no shortcuts, right? We're oftentimes, at Liquid, we're oftentimes confronted with these same choices that some other exchanges make, how much do we need to invest in our compliance, in our security infrastructure, in our KYT, our KYC, our funds travel rule adherence. These are very difficult things to adhere to. And sometimes, I look at the problems that I have to spend a lot of my time on, and I look at other sort of unregulated, unlicensed exchanges, and sometimes my frustration lies is that people from the outside don't necessarily understand the difference all the time when there is quite a bit of difference. Liquid, we invested huge amounts into our security architecture, for example. We got really interested in MPC as a technology, for example, working with Unbound and familiar with many of the other vendors in the space. And I think the important thing is there's actually technology solutions to deal with these things to improve the security of assets that are custodied at exchanges. And I think, like someone mentioned, when something like this happens, the whole industry suffers as a result. And what I fear is that there'll be regulations, some of it maybe not necessarily called for, but it's going to come when these types of events happen. But I think a technical point I wanted to bounce off of Rich a little bit is that, one of the things we really believed in Liquid was the idea that attack vectors could be both external or internal. And we assumed that when we built our cryptographic asset management framework, we assumed to trust nobody, whether they're an inside participant or whether they're external. And for us, one of the main things we saw the advantages of an MPC type of framework where the private key is never in one place or never in even a group of entities at any point. It makes it very difficult for actors, external or internal, to actually use those keys in a malicious manner because there's no key for them to actually get a hold of. And these solutions are not easy to implement, that's for sure. I think, as Rebecca mentioned. But if you do decide, I think for any financial institution, licensed like ourselves or unlicensed like Kucoin, it's a long-term strategy to invest in these types of solutions so that you're giving confidence to your market participants and, really you're elevating the industry as a whole. As we try to develop this emerging asset class of crypto, it's important that we all do our best to give people confidence that this is actually a reliable way to transfer value.
So I think no matter, oh, sorry, go ahead.
Just really quick, I'm sorry. Just based on what you just said, I think what's interesting, and again, I don't want to interject too much here, but one of the things I have found interesting just over the last 5 months is how many of these exchanges are actually making a security decision on a Google search, where they actually just do a Google search of what's best. And then they read a white paper and all of a sudden they decide this is what I'm going to go with. That amazes me because I don't think it's taken very seriously in the way that it should. So one of the questions that we had come up continuously, and I think, Richard, this will actually allow you to answer what Seth just posed as a question is, will this breach bring a loss of trust to exchanges? Has it impacted other exchanges? And is there a loss of trust?
Certainly a loss of trust with the general public, but I wouldn't consider it substantial in terms of long-term impact, which is unfortunate because at this point we should be exhausted of this. But the bottom line is this, and I really have to give Seth a compliment here. He's a lot more political than I am, and if it's not obvious, I'm not afraid to be a little bit rough on these topics. I think that the general public, for the most part, unless they've had funds on KuCoin they can't withdraw or trade, has stopped caring. And I know that's brutal, but it's honest. That's the state of this industry right now. The majority of the participants are speculative investors, and they don't care about these topics. They don't care about security. They don't care about compliance. They don't care about regulation. Perhaps ironically, these are also some of the loudest voices against regulatory action. And me personally, I want to minimize any regulation this industry faces. However, to points that were brought up by numerous people in this panel already, if we don't improve as an industry, unless we set better precedent, we are going to become overregulated. So, regardless of which security solution you're looking at, or, I think the most important takeaway from all this is that this should be done from day zero before anything is live. These should be ongoing considerations. These shouldn't be reactionary things, is the most important thing. And really the big pain point that, yeah, I would love to hear input from others on here is that unless folks speak with their money, we're probably not going to see this change industry internal. And that's what really troubles me.
Mm.
Well, one of the things that I think is interesting is, a lot of the folks that we're talking to are looking at kind of the next generation of what's being traded. And, security tokens and those types of things are going to bring in different types of investors that come with a very different mindset on risk and security and those types of things. And so it'll be interesting because they will vote with their money, and they will pick people who either can demonstrate regulatory compliance or have some framework to illustrate that they're doing the things necessary to secure their investments. And it'll be interesting as the industry continues to evolve, moving beyond the speculative phase into this next generation. Clearly the game's going to change and security is going to be at the core of it.
So Frank, one of the reasons why we're all on this session, right? Because there's something that connects all of us, and that's MPC, right? And how it's being utilized. So I'm going to throw this question out to you, but I think everybody will have an opinion on it. But what is the current state of MPC adoption in this digital asset industry?
Yeah, I mean, from the MPC Alliance perspective, we're seeing a lot more engagement around it and a lot of interest. So we formed the MPC Alliance a little over a year ago. Unbound, CPR, and Zengo got together and said, let's bring the industry mindset together and let's create more industry awareness. And we launched in November of last year. Since then, our membership has tripled. And it's not just innovators who are developing and incubating with MPC. It's Alibaba, it's Salesforce, it's NTT, it's big companies that are getting involved in this MPC Alliance as well. And so we've seen a dramatic increase in interest in the Alliance and in this space. And from the MPC Alliance perspective, our membership falls into two buckets. It's either more in the security realm or more in the privacy realm. And this discussion is more focused on the security side, and it's about 50-50. But today we're seeing there's probably 20 different vendors who are currently offering or are actively working toward offering MPC-based wallets. So I think there's going to be a lot more visibility to this over the coming months, where there's just a lot more availability of solutions and a lot more conversation around this.
Rebecca, I would just ask from your side, because obviously we have two critical partners on this session with us. No offense, Richard, but we do have two very specific partners that we're working with. I guess, what are you seeing? Where do you see MPC evolving, and is the market aware of it? I always find that it's really interesting, because this whole space kind of came about, at least what we're talking about today, because of it was regulation free in a sense, right? We were able to do things without all of the regulatory compliance being on top of us. But now we're realizing that there's a place for that, because you're exposing yourself to breaches of all sorts, right? You have to make very specific business decisions. So how does MPC impact what you're doing and working with our partners?
So interestingly, we are in a journey, I must say. Being with Unbound for 3 years now, I can certainly see, I would say, the involvement of the market. Seth has been such a pioneer, I must say. Like, you were our first customer, and I still remember our first conversation at the time. And since then, it is amazing to see how many, I would say, we call them sales cycle, because I cannot mention names, of course, but we've been involved with the largest banks for the last, I would say, 3 years. And only in the last 6 months, we've signed some of the biggest names out there that I cannot mention, but they're now our customers. So it's interesting to see how we've worked this out together. And we have CipherTrace as a name being mentioned on each and every call. I don't know if you know that, Stephen. Your name comes up in every call that we talk with customers. So 2 years ago, just to exemplify the process, 2 years ago, we were probably on a first call with a potential bank, one of the biggest banks out there. And they were kind of, okay, we know MPC is there, but we're not willing to make a bet on that. We'll go with the known HSM out there. And they did read white papers. They did hear us talk in panels here and there. And now they've signed with us. And it goes along with the regulation that is evolving with the custodians, which is much more, I would say, traditional and conservative. But this is how you get the traditional, again, I cannot say the names, but the traditional hedge funds, the traditional investors, the institutional investors, those that are, serving the regular average American house for that matter. So the market is very much maturing. I do agree with Frank. We're going to see in 2029 with all the COVID-19 sort of even a breakthrough of the, I wouldn't call it glass ceiling, but something like, sort of a burst of the mountain in many senses. Like up until now, people talked about it, waited for the regulators to make some kind of a statement. And 2021 seems like the year where everything is going to become more practical.
Yeah, if I could add to that, one of the core things we do at CipherTrace is we help banks around the world, and there's about 20,000 banks around the world that have retail banking programs, which means they bank consumers, they issue credit cards to them, they have DDA accounts, which means they have bank accounts that can transfer funds over ACH wires and SWIFT. Banks today, due to regulation, are looking to identify crypto counterparty risk, right? Nothing makes me more happy to identify a cryptocurrency entity at the end of a credit card purchase transaction or wire or SWIFT, and I basically give it a double thumbs up, right? That's good for the ecosystem. But what I don't like is when we have stuff like this where we identify high risk exchanges where they have no KYC programs in place, they have non-existent or really porous AML programs. Those are high risk transactions to the fiat side of the world. And in this year alone, in 2020, there'll be about $1.3 trillion, and that's with a T, guys, with a T, that will be transferred or deposited into banks from cryptocurrency exchanges. 1.3 trillion, that's huge. That's a big risk to the banks, even though they may not be in the crypto environment, but we want them to be, right? We want them to be custody providers and to participate more in the ecosystem, but recognize all crypto starts and stops with banks. And if they're not comfortable, that could be a hindrance for growth. So we really need to do this as an ecosystem. We need to have great KYC programs, great AML programs on the crypto side. Banks will embrace us. They'll let those transactions go through, and it'll grow the entire environment, as an ecosystem. So.
If you don't mind, I had a question for both Stephen and Rich, and maybe Frank as well, regarding what do you think about encouraging institutions that are custodying cryptographic assets being transparent about showing their penetration tests? To what extent do you think that is a healthy exercise? Or because I've been trying to figure out our strategy around this, because we do penetration tests, people. We do them multiple times per year, in fact. But I do wonder if by publishing them, maybe we improve our transparency. But on the other hand, I don't want to give a villain some sort of roadmap to how we're architected. So I'm curious to how you guys think about something like that, transparency.
I can tell you that I think that I would be surprised if anyone here disagrees with me, but I think everyone here has a utopia that every single custodial exchange service, etc., has a level of transparency on both solvency and security. Now, to your point, you can't do a completely transparent, at least with the way things are right now, objective and or third-party verification of security. It's not 100% possible. You can put stuff out there that indicates that it has been done and there's a degree of trust. There are companies that will do security audits, and we're gonna go into different topics here, I'm sure, on different elements and coverage of security, but I think that should be an industry standard. And kind of to Frank's point earlier, a lot of the certain entities and organizations that are already involved in getting more involved into the blockchain industry, kind of the Steve's point as well, this is huge to the banks. They focus on this stuff, but I think that for this to really change, to kind of harp on my point earlier, this needs to be an expectation from retail. I would love to see, these cryptocurrency day traders not use exchanges unless they have a solvency audit and some degree of trust that, hey, yeah, we've got our stuff together when it comes to security.
Yeah, and to add back to my bank comment, so while banks may not be doing custody today yet, but many of them are planning it, they're already in this ecosystem because they fund 1.3 trillion of cryptocurrency purchases through credit cards, debit cards, ACH, and wires. That generates fee income for the banks. So they are enjoying revenue streams that didn't exist 5 or 6 years ago that have grown pretty steeply. And most of them now recognize it. Once they get the analytics, like from CipherTrace, and they start matching how much crypto's in their ecosystem, they go, oh my gosh, look at all this fee income we're getting directly related to good crypto. And so it's amazing that banks are leaning forward. I expect they will do more. But the other thing I can tell you is having to work with some of these large banks in the world. Look, I just went through a 9-month cycle to be able to connect my system to a bank. I got pen tested. They reviewed my security policies. They reviewed my privacy policies. I'm as secure as any bank on the planet because I do business with banks. They make me be that way. So exchanges need to start thinking about that as well. They really just got to step it up. And then this whole system can just take off, right? Everybody's going to have their piece of it, but it's a great new payment system, great new investment system all around the world.
Exactly. Just to comment that we're working mainly with banks, and they are doing, I wouldn't call it cryptocurrencies because they're not allowed to today right now. They are allowed to, stable coins in the US right now, just a very new regulation that has been updated, but most of them are doing clearing and settlement behind the scenes using private blockchain, using Hyperledger infrastructure, just as an example. And they're pretty much preparing the whole infrastructure for the day that they would be permitted to custody money for others. I would say nightmare regulations, checkups, pen testing, so many people on one call to check each and every feature, each and every attack vector, just makes us better, makes everyone better. People that work with banks are it's a nightmare, but it's a good nightmare. It just makes you better. So certainly I can echo what just Steve said. Frank, what do you think?
No, I agree entirely. And I think, to Seth's earlier comment about transparency and that type of thing as well, we're either going to need regulatory compliance or more transparency. You've got to have one somewhere in this process. There has to be a level of verification that somebody has done third-party analysis to give investors confidence that they can trust this platform. So I agree entirely with the conversation.
So team, we have about 5 minutes left here. I guess what I would like to do at this point, and thank you everybody for the participation. I think that one of the things we're trying to drive is thought leadership, right? And an understanding that there has to be some regulatory compliance, there has to be some standards that are set, and we're a part of that. We're a part of driving that standard. But if there was one parting thought, I guess, that you guys would want to share based on the breach, based on your day job and where we're going tomorrow, what would that parting thought be? And I'm going to start with Rebecca.
So 2 things. We started with that: hire professionals. If you can't hire them full-time internally, make sure you're hiring someone externally. If you're too small to control your own keys internally with a security platform, work with a respectable SaaS vendor for that matter. And one more, I would say, recommendation for those that do decide to work with a security platform: bundle. Choose bundle of solutions. It could be, just as an example, HSNs for the cold wallets, an MPC based for the hot wallets. It could be SGX based. It could be multi-sig based. I'm of course a favorite of MPC, but bundle your solution, build a security architecture.
Thank you, Rebecca. Seth?
Oh gosh. I guess one of my takeaways, I hope that the people that are participating in this emerging asset class don't throw out the baby with the bathwater. There are definitely regulated licensed exchanges like ourselves that were actually regulated in 2 different jurisdictions that do segregation of client assets, that do regular penetration and security checks of their architecture, that invest heavily in compliance, KYC. We don't give away Porsches at Liquid, for example, but we do, put a lot of emphasis and investment into security of clients' assets. And so I would just say that as people are looking at cryptographic assets and they're looking at the institutions that are providing services around there, that try to spend a little bit of time in knowing who your counterparty is and how they operate, and you'll start to, help yourself to make better decisions, protect yourselves against sort of adverse outcomes when you don't know who you're working with.
Thanks, Seth. Frank?
Yeah, from my perspective, obviously think about security, but security alone is a bit challenging to get people to go through change just for incremental improvements on security. But the cool thing about MPC is not only is it a platform for better security, it's a better operational framework. It's going to make you much more agile and flexible and able to evolve with this rapidly changing market. And number three, the economics behind it, when you look at transaction fees and the costs associated with supporting this framework, it's going to pay for itself multiple times over. So there's really compelling benefits for MPC above and beyond better security. Think about the operational and the economic benefits, and it'll be a pretty obvious choice.
Thanks, Frank. Stephen?
Sure. Just I guess, final thoughts kind of for the industry as a whole. So what's really crypto at the end of the day? It's a store of value, right? And it's consumers' wealth on some level or another. Treat it accordingly. Don't make it disappear. Don't make it easy to disappear, right? Treat it as if it's your own. So, this is a store of value. It's serious. Many people tie up their life savings into this stuff, and we should treat this accordingly. If you look at third world countries out there, look, a lot of us here, have free access to, let's say, US dollars. A lot of countries in the world don't. They deal with hyperinflation. How do they deal with that? They try to access the crypto world. That's much more stable than their country's own fiat. So, but make them feel good about it, make them feel secure, make them want to invest more and grow this ecosystem. So it's a store of value, it's a store of personal wealth, just manage it accordingly.
Thank you, Stephen. Richard?
So I want to start with saying I wish that the pandemic wasn't a thing right now, so I could give Seth a high five for that comment about the Porsche. I think that is a huge takeaway that needs to come from all this. When you've got cryptocurrency exchanges that are giving away cars and very clearly not spending anything on security, solvency, compliance, that's a problem. And to everyone else's point, that is how we get overregulated. I don't think anyone on this panel wants this industry to face more regulation than it already has. And when you're kind of looking at the general public, whether it's on Reddit or crypto Twitter, you always hear about these concerns about government and overregulation. Well, yeah, this isn't on everyone on the panel to fix. This is on the general public just as much to fix. And I can't emphasize enough, please start speaking with your money. If you see a cryptocurrency exchange that is giving away cars and you can sign up and do something that according to the CFTC is exponentially worse than BitMEX. If you see an exchange that faces a breach like Kucoin did and is pointing the finger back at these projects that are not doing token swaps, exchanges like that can't be relevant in a mature industry. It's frankly, to me, sickening that people are already back on that platform and using it. The Kucoin needs to be made irrelevant, bottom line up front, as does any actor in this industry that demonstrates that kind of behavior.
Awesome. Well, thank you guys. As I said earlier, one of the main thing that brought us all together outside of this breach is this understanding and need for MPC. So I want to thank you all for participating. I will ask you to look at the MPC Alliance if you don't already belong to it. I think that just based on this session, you guys should all be a part of it in some aspect. And I appreciate your time and your commitment to continuing to draw more attention to the security around this issue, because at the end of the day, it's security, and that's what's leading it, and we have to have a strategy around it. Thank you.
Thank you.
Thank you very much.
Thanks, everybody.
Thank you.